All right. Welcome to a very, very special episode of the Chart Readers. I am honored to be joined today by founder, president, CEO, and executive chairman of High Tide Inc., NASDAQ HITI, Raj. Hello, sir. How are you doing?
Bruce, aka Mr. Chart Readers, it's a pleasure to be here with you.
Man, I can't stress how much I appreciate you keeping my secret identity. I am the Bruce Wayne of the technical analysis world, right? I'm my little Batman. So, thank you for doing this. I've put together some good slides, and really your voice is what matters, not the slides themselves, right? But what we're going to be doing today is talking about your earnings, talking about the Germany expansion, talking about your bread and butter of Canada, the potential US market that you actually kind of talked just a little bit about on your last interview with the TDR group, and then a little bit of a personal question. I have a little phrase I say all the time, and I kind of want to talk economic outlook and if vices never die in your opinion. But let's get into earnings, Raj. And you've done a very, very well-deserved victory lap, all right? As we look at your earnings, you've talked about it again on the TDR. You should go check out that interview if you haven't. But I actually want to take a step back, if you don't mind. Your last few earnings have actually been very good as well. I remember, I commented that your earnings per share, your EPS beats previously were so good that you needed to put it on stuff like this even louder, right? Why did this earnings, this amazing Q3, feel more amazing than the other one, even though they were all kind of as good for lack of words?
Sure. So let's not even talk about, this past quarter, which was the best in our history. Let's go back a year before that, or 2 years before that, or 3 years before that. And Bruce, my friend, what you will find is we have been delivering on investor expectations and our own expectations. We hold ourselves to high standards for quite some time now. This is not a new thing. You're absolutely right. Why did we get so much love on this particular quarter then? I was waiting for all that love for the last 12 quarters, and it never came on earnings day, but it definitely came a few days later. All right. We call it the earnings shenanigans at High Tide, but everything changed this quarter because it was so loud and so hard to refute that we made that sound go a long way. And that was also compounded. Not only did we have the best quarter ever from record revenue, record adjusted EBITDA, second highest free cash flow ever, best same-store sales growth in 2 years, and net income, the stars truly aligned. On top of that, remember, we also had the Remexian news. We bought a player that drives 16% of the market share in Germany, in medical cannabis in Germany currently, right? So compounded with that news, we saw extreme momentum in our stock. For the first time, I would tell you that, I would say 2 to 3 years that our stock closed green on earnings day, when I thought we deserved to close green on every single earnings day over the last 2 3 years.
And really, that's my driving question, right? When you're beating earnings per share on previous earnings and not getting this same love, I have to ask myself why. Look, the market is crazy and irrational, but at the minimum, I saw the love that you got on the day of the earnings release, and that was a very, very nice, well-deserved. You know what I mean? So, all that said, there's one thing I really want to talk about on this earnings, and we're looking at the slide right now. It's this free cash flow, all right? Now, Raj, I'm a greedy man, and as I'm looking at your earnings, I'm hearing you know how to spend money well. You know how to turn $1 into $5, $10, and I'm thinking to myself, why do we have 7.7 million when you could spend it and do good, right? And it's this battle of this growing company hungry for market share, but you also got to keep some funds ready for whatever, whenever, right? So how are you balancing that? And again, I just see a man that knows how to spend, and you should, right?
Yeah, that's a very, very good question. Not many have asked me that before. I'll give you that, Bruce. Cash retention versus cash reinvestment is a balanced topic that we must consider, not just for continued greenfield growth or organic growth that we have been doing quite steadily. We've been opening, as you know, 20 to 30 stores. That's our goal. We did 28 stores organically last year. calendar 2024 and bought one. This year, we're already at 19. I think we'll get much closer to our goal of 30 stores this year as well. And last year, we spent, let's say, if we built each store, as you know, we spent $260,000 hard cash on CapEx requirements to build the store, and then spend another $100,000 in working capital and inventory to ramp up these stores. But let's say if we spent $400,000 Canadian all in, that still comes to, about 2.8 million a quarter, or 11.2 million on the year. And we did 7.7 million last quarter alone. So after building my 7 stores for the quarter, I still had leftover cash. Now, that's not the equation every time, every single quarter. Quarter before that, we had 4.9 million. Quarter before that, we were 2 million negative. That's simply because we're reinvesting in a lot of new stores. When 28 stores come online, we have to support that with working capital and inventory, and not every store ramps up at the same pace as other stores have been historically doing. It's all different. So we have to balance the cash retention versus cash reinvestment strategy very carefully. And we found our sweet spot, Bruce. We found our sweet spot in the sense that we can open close to 30 stores and still remain free cash flow positive. We can give growth to our investors and have leftover money in our bank for M&A, etc., which we will be upping the ante on some point.
Ooh, I like that.
You cannot do those things without cash, right?
I like it. No, I love it. Again, all I know is you know how to spend the money. And oh man, I like that. I like that all, actually. So we're gonna get into all the stores, the Germany expansion shortly. But look, you have done a very well deserved victory lap on this earnings, right? Is there anything? Again, you did a really good interview on the TRD. That was a great one, and I think you highlighted some good stuff. Anything else you want to highlight on this one before we start to move on the agenda?
No, the only major highlight would be that our stock closed green the first time ever this earnings day, despite consistently reporting strong reports for many, many years, Bruce. So that would be the only thing I would highlight, but that doesn't mean that we have not consistently reported very good earnings. This was coupled with the Remexian news as well. So I would say it was also very, very well timed.
Look, I remember the after hours pop. I know it was at least 17.5% the day the earnings dropped, right? So, man, the market's a crazy, irrational monster, but when it connects, those are the kind of expectations. Really, you've set the bar for yourself, right? Now they're just hungry for more, right? So I love it, man. I love the earnings, and really, like I said, I love the history of the earnings, not just this one. So I think with all that, let's start talking about Remexian. And again, like you said, you do have the free cash flow, but you still were able to make this first M&A, and it sounds like you're at least teasing another one. But as I did my research, all right, I didn't see a lot of bad news on this company. I didn't really see a reason why they would want to sell. And I think that's driving my first baseline question. Why did they want to sell? I think I have guesses of why you wanted to buy them, but how did it all kind of come together? I'm a little lost for the why right here.
I can definitely help on how that happened. So you're getting the background story. So as you know, Bruce, we've been sharing very openly that we've been trying to enter the German market while the store opportunity is not fully baked in yet. It's not fully ready. So we've been trying to enter the German market by acquisition of a medical cannabis distributor / importer. We looked at the PureCan deal, which did not materialize, for all the right reasons. The universe is very intelligent, and it knows how to bring deals together and how to bring people together, and that was not meant to be. But what that also made us do is we continued to knock on several doors, and the Remexian opportunity came out of it. We spoke to multiple German players, almost all major German players we spoke with. And when we reached out to Remexian, we realized their distribution reach in Germany and their discount strategy, which exactly mirrored us. So, I reached out to them and I told them, look, we are very serious about entering the German market. And our strategy mirrors yours in Canada. And that's exactly what we want to do in Germany. And instead of going head to head, a partnership, a strategic partnership, where you get a partial exit today with more coming later, would make a lot of sense instead of going head to head. And they completely agreed. We had a few conversations. This transaction did not come across the finish line in a month or 2 months. It took us 5 months to get there. because it's such a sophisticated company and strong and established enterprise. But they clearly saw the value in partnering up with us versus competing with us. So that's the real truth. Instead of going head to head, we decided to become partners.
So there actually was no for sale sign. You truly knocked on the door and they said hello.
Absolutely no for sale sign, knocked on the door, cold call type of situation.
I'm telling you, Raj, I look, I didn't do a lot of fundamental, I'm a technical guy, right? I didn't do a lot of fundamental research on Canada. You just dropped your earnings. You told the world everything about Canada. I put my time into this company. I looked for why they would sell, man, and I couldn't find it. And that makes a lot of sense. And it's like I said, why I started with such a baseline question. Look, I think from there, my wife was part of an acquisition, and good companies get bought and bad things happen, and sometimes bad companies get bought and good things happen, right? And a lot of it comes with leadership decisions. What is your plan with the current leadership there? If you don't mind me asking, I don't know if that's too detailed or not, but are you making changes? Are you bringing people in? Like, what do you envision with that team?
No, Bruce, look, we've kept the team in place. They are best in class. They built a company with 16% market share. We get to buy them, so we find ourselves in a very fortunate position that we become their majority partners in their business. But they built this business. They already had 16% market share, so all kudos to them. And I'm a big fan of don't change anything that's not broken.
Exactly.
And I know Canada inside out, or at least that's what I'd like to think, given our strong performance over the last 6-7 years. But I don't know Germany that well, and I don't know, and our team does not know medical cannabis that well yet, right? So when we're partnering up with the best-in-class team, that's also helping us as operators to learn from what they've achieved and what they are doing, so they're remaining in place, and we very nicely incentivize them to drive further growth. The senior leadership team of Remexian. So they were just here in Canada. We did a Canada-wide tour,
Nice.
And we are already sort of reaping the benefits of that, which I could get into.
I'm not gonna lie. I have a question about potential benefits, but my like I'm telling you, my wife was part of an acquisition. They obviously bought them because they thought that the company was great. She was an SVP, and man, they gutted all the way down to the VPs and just brought in their own people. And at that point, why are you buying them, right? Like, let the company you trusted enough to buy, let them do what they're doing well, right? So that honestly was the answer I wanted to hear, man. So I love that a lot, actually. With that, so again, like I said, the most research I did on this company, and a big thing I saw was their biggest source into Germany actually comes from Canada, right? So they're importing from a number of different places. I think 19 was the number, correct me if I'm wrong, but Canada was number one. I don't want to use synergy and vertical integration and those kind of fancy words, even though I obviously just did, but are you expecting your connections at home to help your new home in Germany? Is that kind of what you're foreseeing?
Yeah, absolutely, man. Like, remember, I told you they did not want to go head to head. Also, given that, we have a similar approach here in Canada, but the difference is they have the distribution reach in Germany, and we have the distribution and the procurement reach in Canada, which supplies 47 to 50% of all cannabis that enters Germany currently, right? So we already know the micro, craft, small, medium, large licensed producers. We work with them daily. We procure over $400 million of cannabis here in Canada. And this is why the first order of business for us was to get the Remexian team here. So Stefan and Franco both came down. And myself and Andy, Stefan, Franco, we took a Canada-wide tour. We started in Quebec, went to many licensed producers in Quebec over 2 days. Then we went to Ontario. Then we went to British Columbia. I just came back home, actually. And we had a stellar trip. Not only did we have amazingly productive discussions, which led to new brand and supply agreements, we also secured strong pricing and favorable payment terms. Again, thanks to our established relationships. And this is the bonus that the Remexian team is getting, and they were very well aware of it. So it's a true partnership in that sense, where they take care of distribution capabilities, and we start taking care of procurement capabilities.
Oh man, I love it. I love it. And I think this also really ties into the next kind of questions, and these are actually the first of the viewer questions. So I can easily tell you that licensing was the most complex thing as I was looking up just Germany in general, right? I was trying to figure out what the market you're entering actually looks like, and my goodness, I am lucky that we have some really good viewers, and I have two questions about licensing, and I really can't tell if I should ask these together or separate. So I'm going to ask them together, and then feel free to dissect it either way. But look, again, I keep referencing this TDR report interview, right? You did mention that we were hoping to get some updates on licensing around this October timeframe. Do you have anything there? And then the secondary question is, it sounds like there's at least rumblings of a mortuarium. That's a tough word to say, and I apologize, but a mortuarium on licenses or imports into Germany. And if that is true, how does that impact High Tide? So licensing in a nutshell on those two questions.
Sure. So the first question is about the German store licensing, which I had mentioned that we should have an update by October. We are still waiting in line to hear back from the BLAE, which is the authority to review and approve model project applications that we put in ours back in May of 2025, or April 28th, I believe, was the exact date in 2025, and we're still waiting. But let me tell you this, the new CDU government is not very enthusiastic about pilot projects going through, and none have been approved so far. And I believe 46 or 48 submissions have happened, out of which over 20 have got rejected. No one's got approved. We've not got approved either, but we've not got rejected either. So we're still waiting for our messaging from them on where we stand on it. We expect to hear it in October, as mentioned by them, by BLAE, but we're still waiting to hear back, and we'll let the market know. This is not a material situation for us, because we don't know what this means. This means one license, two licenses, zero licenses. We don't know. So it's not the biggest deal, but having already established a foothold in the medical cannabis market, having 16% of the current market share, remember, Bruce, it's going to start feeling native to us when the store opportunity arises. We're already playing in the German market. So that's definitely going to help with our trajectory in the long term. And we're here playing in the long term. It's not about, winning one license next month or the month after that. We're now in the German market, and our goal is to become a sizable player there, even in the Canna Cabana world or even in the retail world, when that opens up, right? But today it's not open. So that was the clarity I wanted to give you on that. And I think you talked about the moratorium on licenses, or the import licenses, or the import permits and the export permits. So let me give you a little background on that. So that is about Germany having to go back to the UN or to approve more import permits into Germany to import cannabis. They have a quota that they get every single year. And last 2-3 years, they've been running out of that quota because the market has been exploding so much. So they have to go back to the UN and reapply for it. And we've been told by the by BfArM that it's going to, which is the German authority, which is applying for these quotas, that it is going to happen very soon. It could happen next week. It could be the week after that. But currently, no new import permits are being issued in Germany, and this happens every single year. So it's nothing out of the ordinary.
Look, I like all that actually. Especially I like that others have been rejected and you haven't, and you're just sitting and waiting. I really like these two updates right here on the moratorium. It's such a hard word to say, but hey, at least you're not falling behind, right? You're entering a new market. You are right there, and really, it sounds like Remexian really is just doing the heavy lifting until all the licensing kind of figures it out, and then you guys can kind of do the rest. Yeah.
Yeah, that's absolutely right. I mean,
Yeah.
Remexian is going forward with the medical cannabis business, and that's the main business today in Germany. There's no other cannabis segment that exists, which is for profit. Social clubs are not for profit. But in due course, when the store opportunity opens, we can play on both sides, medical and recreational cannabis.
No, I love it. I love it. Cool. So with that, I'm going to turn to Canada. And before I get to the questions, I got to talk about this slide real quick. So all the other slides, I really wanted it to be just in the background. When I saw this on your investor relations page for the first time, I was shocked. I brought my wife to show this thing. We're talking about retail sales per square feet, and you're not looking only in your sector. You are looking at Costco, at Walmart, at Target, at regionals, and you're smashing most of them, man. I saw Vahan do a recent Cultivated News interview, and one thing he really highlighted was getting these premium locations that you weren't before. I don't want to ask the same question, but I kind of want to dig into that a little bit. outside of the premium locations, are you getting good and really regular leasing terms? I can tell you in LA, if you said you were doing anything marijuana related, all of a sudden your rent was going up 3-4x what it would have for like a coffee shop or anything, right? Outside of locations, are you getting good terms and deals?
Yeah, so like, well, even the locations, Bruce, to your point, historically, everyone wanted a cannabis premium for rents, right? That's normalized now, and we are in line with other retail categories. Now, that may not be the case for smaller retail operators, that have shaky grounds in terms of being able to compete in this very, very heavily contested landscape, right, here in Canada. So, but given our size and scale and our relationships with national landlords, we are not paying a cannabis premium rent anymore. And even in the beginning, when the games begun, we were behind others to get locations because we refused to pay cannabis premium rents,
Nice.
which is now changed. So that's on the real estate side. On other deals and stuff, the premiums have been, you could see our track record, right? We've been paying between 3 and 4 times, mostly between 3 and 3.5 times annualized adjusted EBITDA. And we look at last 3 months, last 6 months. We're not looking at what happened a year ago or 2 years ago to give the value to that business, which does not exist today, right? So we're very methodical about how we approach things, and we are not overpaying. And you can even see a player like Remexian, we paid 3.64 times adjusted EBITDA multiple, which is extremely attractive. So we're very, very savvy, disciplined acquirers, and we take our time acquiring companies, and we don't overpay for them.
It's like I'm buying my stocks, right? Why you don't have to jump in. You wait for the right one, man. I love that answer, actually. Very solid. And again, I can't believe the numbers on this thing. And look, if you go to the investor relations, you can see what all the little numbers are, but these are all recent things. I know these are 2024, 2025 numbers, so it is crazy to look at this slide. And with Costco being on the top right there, I think that's a good transition to the discount model club that you've emphasized this so many times. And I think, to me, why can't anyone rip this off, Raj? When something works, other people don't try to make it better. They just rip it off. Why has no one been able to copy this and succeed like you have?
I wouldn't say no one's trying to copy it, but
Okay.
execution has not been there. There's many competitors that have gone in the discount world after us. There are many that refuse that a loyalty program makes no sense because they believe in quick service, and then they just launched their own loyalty program, again confirming our strategy, which we launched 7 years ago. So there's many competitors that are trying different things or trying to exactly copy us in many, many ways, but there's a serious lack of execution. They also don't have the scale that we do. If they try to mess with us, I can easily compete with them in 10, 15, 20 stores, drop margins aggressively there and raise it somewhere else in my portfolio because I can afford to do that. I have the scale. So it's very, very hard to catch up with our discount club model. It also has some very native elements, given our accessories production expertise, distribution expertise, our operational expertise, given that we've been catering to the same customer for 17 years through Smoker's Corner, which was the predecessor to HITI. So there's a lot there, right? You can attempt to copy someone, but first to market has its own advantage. Our accessories mode that we have and the real estate mode that we have that others don't have is another very big advantage. So the competitors can try, but they seriously have been lacking execution to date.
The diversify store answer in the beginning was actually a rather interesting answer to that. I wouldn't have expected that, but yeah, that makes sense actually. So nice. Nice. So we're gonna come into the U.S. and I can't tell you how many viewer requests for this question there was. So you'd mentioned on your last interview that, again, this is all what if and all that, but you're envisioning a U.S. expansion potentially with licensing. That's really all you gave on the last interview. Can you give us more here? What does that mean for you and anything else really?
Look, I mean, the only thing I can give you is it's still in very much exploratory stages. We have just started looking at this. So how we're looking at this is the following. Although we have a ton of growth in Canada, let me confirm with you, Bruce, and for all the listeners, that in Canada we can get to upwards of close to 350 stores in the long term. That's more than 50% growth where we are today, right? Taking our revenues from 600 million to close to 900 million and then breaching that mark. That's Canada alone. You add Germany to the mix, all that growth is not accounted for. That's all going to come.
Yeah.
So we're busy. We have our plates full, right? But given the US rescheduling of opportunity becoming more and more real, and if we can see profits start coming into the retail landscape, we want to assess a playbook or a world out there where we could license the Canna Cabana brand to an existing operator. Let's say you're an operator in one of the states and you have a dozen stores. We would go to you and tell you, listen, we would love for you to convert into the Canna Cabana brand. We'll give you our entire playbook, but we have to make a deal with you at a pre-agreed multiple of EBITDA to be able to buy you later. So while we run this business, until federal legalization takes place, they would run the business and they would keep majority of the profits. We'd be able to strip some through licensing opportunities, through Fast Tender, which is our kiosk model that we have, through our Canna Cabana brand licensing. We can strip some licensing dollars, and post that, we can agree upon a set multiple of EBITDA, which we can act upon later for acquisition when it's federally legal to do so. So that's sort of the plan that we're reviewing and we are looking, but I don't want to get anybody's hopes up because it's still very much in exploratory stages. But if rescheduling becomes real and we see some momentum, we may be able to take this path ahead in the US.
I at least like you saying the thought about the acquisition at the end. It's not just going to be, I'm going to franchise a McDonald's and move away. No, I want that McDonald's at the end, right? So that's at least a nice little tidbit you did throw onto here. So really, I appreciate all the questions. This is the last one here, Raj. Look, I'm not a financial expert. I'm not an economist by any means. I don't really know what's going to happen. And, do you see yourself in a recession-proof industry? People think of laundromats, people think of other things, but man, one thing I always say is vices never die. And do you see yourself in that class of like laundromats that regardless what it is, my customers are coming?
I absolutely do. Yes, and if cannabis is, if it's not recession-proof, it's definitely recession-resistant, right? When people are depressed, they're smoking more weed. When people are depressed, they're drinking more alcohol. And similar to alcohol, cannabis consumption tends to remain resilient during downturns. And value-driven models like ours thrive even more when customers are looking to save in these style environments. So we're actually positioned really well to benefit the most out of that equation. If a recession was to occur, it'd be a lot bigger challenge for some of our other peers or competitors that are playing in the premium world and that don't have a clue on what the discount world looks like.
No, I believe it, man. Vices never die. And Raj, you have taken High Tide from $1.64 to $4.05 USD. That's 231 all the way up to 571 Canadian, man. That's more than I would have made if I just left my money there and walked away instead of my random little swings, right? So you've got a very, very, very strong position, man. I appreciate your time, and yeah, I hope this isn't the last one. I can easily say that.
No, man, if you're going to give me this many compliments, you're going to give High Tide this many compliments, this will definitely not be the last one, okay? You can call me anytime for an interview.
Hey, it was your viewers. There were a lot of really good viewer questions on this. And hey, I will promise you, the day I show my face and name, you will be the first one to be there with me, man, since you gave me the first interview. That's my thank you to you easily. So one more time, High Tide, HITI is the ticker. I actually very much suggest you check out their investor relations page. Like I said, I found this slide, and I mean, there are a lot of other really cool ones. You guys put a lot of time into giving your investors all the info they can get. Raj, one last time, sir, thank you so much for the time, man. Enjoy the rest of your day, and thank you.
Thanks so much, Bruce. Appreciate you having me.
Hey, have a good one. Bye.